now leaves a technical objective marked out and could present some potential pushback from here. So we'll watch for that.
Hi, once again, everybody. Welcome back to the Comstock channel. I'm Marlon Bowling with you. Always a pleasure to visit with you about the ag commodity markets and ag-related topics in general. Well, today my guest is actually Joe Kemp. He's with Comstock Investments, and he joins us at midweek to talk about what took place in the markets here. We're getting ever closer to the end of the month. It's almost here, Joe. Of course, tomorrow could be spooky for a lot of reasons. The grain market's kind of mixed today, although I guess the highlight, the star, would have to go to soybeans. Why?
Call it calm, relatively mixed, the calm before the storm potentially too, with all that's ahead still, as you mentioned, the close of the month and definitely that first full week of November next week, we're going to have to address. There is positioning in anticipation of everything that's in front of us. Also, some spreading is a reason for mixed results on the major grains here. We talk about soybeans being the leader, wheat, though, with some turnaround gains eventually in the session, and corn staying lower for the close, although not all of the contracts. So it was spreading potentially more active, not just among the grains, corn, soybeans, and wheat, but also within the calendar spreads as well. This time the spreads going back out. They have been strengthening for corn recently. That's a market signal along with basis that tells us about the market's need for securing that coverage as we wrap up harvest. And it has been a bullish signal. It's just a reversal of that. And again, a general unwinding. And that can be a case that we observe such a thing in a lot of markets leading into, again, the close of the month, the start of a new month, and all of the risk points that are with us next week.
You know, on the corn market, I'm looking at a daily chart here, and it looks like we have been in a big coil formation ever since, mid-August or so, doesn't it?
Holding up, though, relatively better, and that's back to the question about soybeans and their leadership. They have been simply the worst performer and having more to rebound on a day like today, where the soybean oil particularly can escape the pressure that was on the market because of crude oil. Definitely at the start of the week was a big deal, down $4 for most of the session there on Monday, ultimately not following through on a turnaround Tuesday, but for most of Wednesday's session now being a leader for the broader commodity space and definitely the soy complex. But back to the corn, it has been relatively range bound, in part because it's been caught between the weaker soybeans and at times recently some life in the wheat market. Definitely that spread aspect is an important part of what we're seeing right now as we head into the rest of this harvest and then the end of the year, and all that comes with this shifting focus from how big the crops were to how are we using them.
Well, I'm sure the commodity funds are looking at the long-term lows that occurred here maybe a couple of months ago or so as critical support, aren't they?
Definitely those recent lows are in play. Below that, there are key levels from 2019 and 2020 yet on the charts that were long talked about, bearish targets that for now are well below the market. First up would be these yearly lows that are not too far behind us. Beyond that, it's for corn still $4 even, that psychologically important level. For soybeans, we're back below that $10 support area, again on a relatively weaker trend as of late for the soybeans. And otherwise, just finding out if the end of the month, this seasonal transition, again with harvest finishing up, if this means something different from here going forward now into the next 2 months.
Wheat seems to be pretty volatile here lately. What does that mean?
Volatile as it yo-yos behind the same up and down oscillation for prices abroad, namely Russia and France. We continue to talk about. There are some big tenders out there, Algeria, watching Egypt as per usual, but wondering about where the latest offers are going to land, given that recently the Russian government stepped in and told their exporters, we want to keep a price floor below this wheat market. If they're acting outside of that, that's going to be a really bearish influence yet. Despite that floor, the prices can go lower anyway. And We want that test for the wheat market before we know much more about where the U.S. market is headed. Although more and more we are taking on the bigger dynamics fundamentally for the U.S. crop. It had been a more bullish feature how dry it's been leading into the start of the new winter season. And even this week, Monday, the crop progress numbers after the bell showed those winter wheat condition ratings, at least starting out, lower than expected.
Well, I want to transition into livestock here, but I guess this question applies to grain and livestock. Maybe it's a good segue here, but anyway, the large funds a lot of times like to book profits right at the end of the month. Well, tomorrow's the end of the month. Is that part of what we saw happening today? There were some big moves in livestock on the cattle that have been performing really well, but do you think that was profit taking today? And does that apply on some of the grains too?
I do believe that would apply to the cattle futures, that you're looking at profit taking being the mode of speculators that have been carrying considerable bullish bets on the livestock, but cattle in particular, because they sold off today. They followed through in part from the bearish turnaround and the reversal lower yesterday. It was a fundamental factor in part of a retreat for beef values and a little pessimism on the cash side then. But the technical aspect encouraging then that decision to say, just step out, take the profits that have been built up over this last 5-6 weeks. And that could be more so than it is right now, and then it being an end of the month issue, which is certainly probably part that. It can also be just getting out of the way ahead of next week. And we know from the most recent history, it's been the cattle futures that have been more specifically vulnerable to what the stock market's doing, sensitive definitely to the political targeting. And that can be the case right now. And I say that because it's in contrast with what is still a rallying hog market. The speculators saying, let's keep our foot on the gas pedal there and stay long in that market. For now, no exiting ahead of next week, but that can still occur over the next few days and even Monday to open up before the election.
Well, that looks kind of nasty on the charts here. When you look at the live cattle and maybe especially the feeder cattle, live cattle are getting close to the recent lows that were made here a couple of weeks ago. Feeder cattle took it out. And now, I mean, you have to go back a little ways before there's another low that would maybe offer some support. But these charts have got to make people nervous, I would think.
Yeah, you definitely have a loss in momentum here in the action that we've observed mostly over these just last two sessions, and so it can be a bit of a pause. There can be a that's too much, that's too fast type of reaction, but the broader look now is vulnerable to what you mentioned, is coming down to where there's not much in the way of support before you get to the highs, or the lows rather, from earlier this close of the summer, early in September. So a more vulnerable looking cattle chart all of a sudden, for sure, on a day like today, I think linked back to where we started, profit taking and those decisions by the speculators. You mentioned, is it like the grains? It is in a way, because it's the opposite of that. If you're getting out of longs and booking profits, you're closing those longs in the cattle. If you're stepping out of the market and booking profit from a commodity trading fund standpoint in the grains, that's mostly covering short positions, and hence you have the mostly higher grains so far to talk about, and then the lower reaction on the cattle.
So how did the move in the cattle futures correlate over to the cash cattle trade and also the beef cutout values on Wednesday midday, I guess?
You know, I'd almost flip it around and talk about the break lower for the boxed beef numbers, triggering some pessimism over the cash potential that's still yet to play out in its fullest extent, probably yet this afternoon into the next days to finish out the week. And it's going to be, for now, an excuse, if you will, or a motivation for those packers to try to bring down a cash trade that advanced by $1 or $2. It looked like coming into the early part of this week. The surprise last week with the strength in the beef values and the strength in the cash trade in many respects is now just being faded or leveling off here now this week, going back the other direction. So yet to be determined how this cash trade, I think, will mostly hold up. Yet to see it back off again a dollar or two and get back towards last week values because of the break we've had so far on the board, which has stemmed from this reversal, this expectation of a softening for beef prices. That seems to be the order of events for now.
And then you have the shocker of the entire ag trade. While the cattle market just looked terrible on the charts, here you have the December lean hogs just going parabolic to the upside. That's just amazing. Now, it almost did it all by itself, though. The other months were higher, but only by a little bit. So, what is the market telling us here when you have that kind of a spread change?
It does start with the technical aspect of the hogs, unlike the cattle, finishing yesterday's up move right near the top of the highs of the session, whereas the cattle had some early upside attempt and then failed for an outside day down. Well, because you're poking out to new highs and then holding, that only emboldens these bullish speculators to defend and in some cases add to their positions. We talk about leadership for the nearby contract in one that's tied to a cash trade, which has been strengthening. It has been strong for the pork cutout values, and then again, unlike the beef, not as sharp of a pushback yet observed this week to leak into the futures trade. Now, the other technical aspect of it that's important to note is that the December contract was heading up towards a closure of an expiration gap. It did reach just above where the October contract went off the board here. And for that convergence to take place, now leaves a technical objective marked out and could present some potential pushback from here. So we'll watch for that.
Anything catch your attention on the outside markets on Wednesday?
Just really rather how quiet they are for the most part. We have to keep an eye on that oil storyline. I believe it's very much like a pendulum, unfortunately. So if we have a de-escalation of risk, some calming of the conflict in the Middle East like we did over the last weekend, unfortunately, the next swing of the pendulum feels like it's something popping off. Some attack or some risk point that swings oil prices back higher. If that is the case, then we can be back to feeling less defensive than had been felt in the overall grain space now leading up to today's session where crude oil is a little bit higher. So we're looking for that as we otherwise just watch all of these markets hold their breath collectively for next week. And that's the election reaction, the Fed meeting a couple days later, and for the grains and livestock, the next USDA report coming out on Friday.
Oh boy, election next week. Yeah, I can't wait to see how everything is interpreted after that. Joe, it's great to talk with you again. Thank you for the time. I appreciate that so much. And we'll talk with you again soon. Joe Camp with us with Comstock Investments. And again, if you have comments about your own production, or maybe you have some questions that you would like us to ask on these episodes, put them in the comments below. And we will pass them along and include them in future podcasts. Appreciate that very much. For Brianne Hendrickson, our producer, I'm Marlon Bowling, and we'll catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.